Okay. The second query, Rushabh, is from, well, I'm going the other end, a very young chap, Harsh, age 20 years. The goal is lump sum returns. Harsh would like to invest 2,000 rupees as an SIP in a few funds for a time horizon of 40 years. Okay, Rushabh, well, he's got a query. 40 years is his time horizon. Can you recommend a few funds to start building the portfolio?
Neeraj, when I was 20, I don't think I was thinking about investing at this point of time. And 40 years seems to be really mouth-watering. So I can't even imagine the compounding what he will make at the end of 40 years. So that's, first of all, congratulations to him that, he's starting his investment journey at a tender age of 20, and he's, his thought process is so clear. See, no amount is small when it comes to SIP. I think if you want to fill a bucket, it's like, drop by drop, you fill up the bucket. I think that's the right way to go ahead. This is what I'm thinking, because he is very young and he's starting his investment journey for the first time. I would suggest him to go for a traditional index fund like Nifty 500 fund. It gives a flavor of everything into it. Around 65-70% is into large caps. Around 15-20% is into mid caps, and the rest is into small caps. So I think to start, go with Nifty 500 index fund. Try and taste, how equity works, or for a couple of years, and then venture into a little bit of an aggressive products. Because what happens is that any which ways the valuations in the mid and small caps are quite high. Although he's following a SIP methodology, we don't want him to be disappointed and completely venture out of the equity segment. So starting with Nifty 500 index fund should do the job. And then once he gets a flavor of equity, of how equity as an asset class works, how the volatility works, then he can create a proper portfolio and venture into mid and small caps.
Okay. Rushabh, again, sorry, maybe a repeat question, but could it be an active mix of actives and passives?
Neeraj, because it's just 2,000 rupees per month. Once he increases his amount, then venturing into active products will be much better, because the amount is quite less. So just starting with Nifty 500 index fund should do the job. Then probably he can venture into active funds.
Okay, and Rushabh, just one more follow-up query. When should the rebalancing be thought of? Because the person is wanting a lump sum. He's got a 40-year time frame, yes, but the starting sum is not very high. So should he look to build on as soon as 6 months are over or 1 year are over? Should he do a step-up SIP? What would you recommend?
Step-up SIP would be great. On an average, anywhere between 10 to 20% annual top-up is recommended. Either he can top up in the Nifty 500 for a year or two, or else if he's planning to step up every year, then venturing into other products also makes sense. See, reviewing portfolio very regularly is not the wise thing to do. What I mean to say very regularly means like every 3 months or 6 months may not be the right approach. Once in a year is very good, because equities as an asset class will have pockets of outperformance and underperformance, and so will the funds. Funds will have good times and bad times, especially active funds. So reviewing once a year is fine. Rebalancing, I don't think rebalancing should be considered right now. Probably once he has a proper portfolio in place, and depending on his risk, how his risk is panning out to be in the portfolio. Say after 6-7 years, if his original allocation towards mid and small cap say is 50%, and if that allocation increases substantially to say probably 65-70%, then rebalancing can be done. But again, rebalancing should not be done very frequently, because ultimately it breaks the compounding process.
Okay, Rushabh, great having you as always. Thanks for all of that wisdom. Much appreciate your time.
Thank you so much, Neeraj.
All right, and viewers, thanks for tuning into this leg of the Mutual Fund Show.